Ready?
I'm ready.
Are you recording, Kyle?
I am.
Okay. Hey, everyone, and welcome back to another episode of the Passive Income Through Multifamily Real Estate Podcast. I'm your co-host, Lolita, also joined by Kyle. Before we get started, please make sure to head over to our website, aptcapitalgroup.com, and grab our free Passive Investors Guide. Also, if you're interested in learning more about what we do, you can schedule a call with Kyle on our website as well. All right, now time to get into our show. Today we have Juan Weezar here with us. Juan, welcome to our show. How's it going?
Thank you. Good morning. Thanks for having me.
Good morning. Glad you're here. Before we head into the interview, here's a little bit about Juan. Juan is a licensed California real estate broker that has acquired his Certified Commercial Investment Member designation. CCIMs are recognized experts in brokerage, valuation, and investment analysis. Juan specializes in selling multifamily apartment units and is the fourplex market leader in Long Beach, California. So Juan, I know you have some real good content to share with our listeners today, so let's get started. And could you please tell the listeners a little bit more about yourself and what you currently do?
Sure. I'm gonna so that people get an understanding, I guess, of my motivation and the way that I perceive life, is to kind of go back to I guess the very beginning. So my family comes from Mexico, from Zacatecas, Mexico. So I'm an immigrant. I came to the U.S. when I was 4 years old. In Mexico, we lived in this little village that had no running water, no electricity. We were farmers, a very dry land. My parents only got a sixth grade education, and had we stayed, that's where we were headed also. And so early on, my parents, knowing that they wanted something better, they wanted an education for us, knowing that the U.S. was the land of opportunity, they immigrated illegally, of course, and then we got started here with our life in the U.S. And so, kind of an interesting thing with our family is, so there's 8 of us, and I'm the 6th child. And kind of knowing and seeing the sacrifices as kids, not only coming here, but in the summers having to work picking garlic, to kind of make ends meet because there were so many of us. We saw hard work, but we always saw our parents pushing for education. So probably my parents' biggest accomplishment was getting all 8 of their kids through college, degrees and masters and everything else. And so, we come to the U.S. to work, to achieve, and to certainly, be part of the American dream. And so that's a little bit about me. How I got started in real estate. So once I was in college, I went to Long Beach State. Someone said, hey, you should get a degree in accounting. If you get a degree in accounting, you'll be the last person fired when you're part of a corporation. I said, well, that sounds pretty secure. Let me go become an accountant. I don't know that was my personality. It was really hard. But so anyhow, so I did everything they told me to do. I was heavily recruited by the biggest firms, PricewaterhouseCoopers, KPMG, Deloitte & Touche, Ernst & Young. And so as a junior, I had job offers from all 4 companies. They were recruiting early on if you met their requirements on education, school involvement, et cetera. And so I was going to become a CPA. So I had this beautiful future laid out in front of me, doing auditing, which doesn't sound like fun, but certainly a good career, something my parents would be proud of. Along the way, I met someone who was a real estate investor. He was an appraiser. He was a contractor. He was taking buildings, changing their use, adding income, creating wealth, everything that was word for word, everything that I read in Rich Dad, Poor Dad. This person, Mark Milan, who's my mentor, friend, and business partner, he was actually doing it. So as a senior, I had this accounting job waiting for me, which a lot of students in my position would have loved to have. And I gave it up. And I called the accounting company. I said, I'm going to be graduating soon, but I'm going to pursue something else. And I decided that real estate was going to be it. And I've been doing real estate since, 2002. And once I committed to okay, I'm going to do real estate, I'm going to learn from Mark. Mark needed a right-hand man. He told me, if you work with me, then I will teach you everything that you need to know on really how to build wealth and how to retire someday and based on the income that you've gotten. So the things that you're teaching, I got taught early on, and that's all I've been doing. So certainly this model certainly works.
Yeah, awesome. Great story. Thanks for sharing that. And amazing. I wish I could have met a mentor as early as you did. And that's not easy to find for sure. How did you meet that mentor?
Funny. So okay, he was flipping this like 12 unit apartment building in a really rough area of Long Beach off of Atlantic. And so during that time, we were maybe a sophomore or junior, and I was part of like a fraternity. So I was part of a fraternity. We needed a house. We met Mark, and we needed a house to house our fraternity. He needed all of his units rented up quickly because, as you
Hmm.
know, as an investor, time's money. And so it was a perfect match for a few months until the police kept coming out because of the parties. And then he told us, he said, guys, if you move out in the next 2 weeks, I won't tell your moms, your parents what has happened, and just go find somewhere else to live. That's how I met Mark. And then he was at that time, he was building the first self-storage in Signal Hill. And so he needed someone to run it. He knew I was in college. He just needed me for some small stuff. And that was kind of the beginning of building this trust, this relationship. And me asking a lot of questions of like, what are you doing? How much money are you making? And I was thinking, geez, that's a lot of money.
Awesome. Yeah, you've
So
got to take advantage of those kind of small opportunities. So awesome. Well, today we're going to talk about California real estate and in general SoCal real estate, which is not a topic we've covered yet. So let's start by giving a kind of a synopsis and your opinion on how the California real estate market currently is performing.
mhm. Okay, so this, it was interesting. So this year where values were supposed to go up by like 4.5%, and then COVID hits, right? And then we're thinking, geez, this is the worst. We're in a recession. Clearly now it's been announced. Values are going to drop, right? And the answer is that's not correct. It's actually now they're projecting. I mean, these are the biggest financial institutions, Goldman Sachs, um, Wells Fargo, and some of the others are saying, JP Morgan, they're saying instead of a 4.5% increase, we're going to increase by 3%. So even when you hit us with the worst possible situation of high unemployment and all these other things that are going on, recession, the real estate market's still going to go up. That's shocking. That's shocking to me, right? Because I've seen past downturns and I've learned from those where I've seen that. And so right now, the real estate market, shockingly enough, is still really good. So I know a lot of our clients are calling me and, hey, Juan, we're looking for the best deals. Clearly, sellers are desperate. And the answer is like, they're not desperate. Why would they be desperate? They have tenants in place. The tenants are paying rent. Yes, they've changed the laws. It's getting a little tougher, but there's no desperate sellers. Loans aren't coming due. So people are just hanging tight. And so if anything, what we're seeing is probably less sales. And it's not because the market's not good, is that sellers are like, well, with all this going on, I don't want to have to sell at a discount. And so then I have to have that conversation. Doesn't mean you have to sell at a discount. In fact, we've been able to successfully list and sell properties at market. We're not discounting anything right now. Now, what's happening on the larger scale, above the 4-unit market, what's happening there is that underwriting has gotten really, really strict. And
Hmm.
so now if you're a buyer, you got to come in with even more down. So that's making it a little difficult. But the interest rates are still good, like really, really good. Underwriting has gotten tough. So the market, in my opinion, is still really, really good. I know that a lot of investors are antsy. They have money. There's a lot of money out there, and they're ready to buy. No one is saying like, oh, geez, due to the recession, I don't want to buy. They are not saying that. That is not anything that's being said. They're just saying, if there's going to be a discount, I want to maximize. But now as we get further and further along, we're not seeing a discount. Now they're like, okay, let's just go buy the best thing that's out there.
Yeah, I think the discount is in the interest rates right now. I mean, they're down 100, 120 basis points to where they were 3 or 4 months ago. So you can look at that side of it as well. Yeah, you're not buying on a lower cap rate, or a higher cap rate, but you're still getting a discount in that interest rate, which is still a great buy. And if you're a long-term holder, it really makes sense to get in now, in my opinion. Any thoughts to that?
um, what you said was so smart. I had never, that's, I love what you just said. Yeah, the discount is in the interest rate. And, a lot of times I tell our clients, like, don't focus on the purchase price. That's not what we're like signing up for. We're signing up for the payment. That's what we're getting. What's the payment? What's my rent? That's it. Like, that's where it stops. I don't need further analysis. Believe me, I'm a CCIM. We could go get deep into numbers. We don't have to do that. So what you just said is really, really important for people to know.
Yep, absolutely.
Yeah.
All right, so I brought you on today to debunk the myth of California real estate. I think you either love California as a real estate market or you don't love it. And I want people to understand that you can make a lot of money in any real estate market that you're in, and California is certainly one of those. And, because of the low cap rates, you can make millions and millions of dollars here quickly. So I do want to start though, but what are the biggest challenge of California real estate investing?
Mm-hmm. So, when I was looking through these questions and I was like, what's the biggest challenge? And I'm like, honestly, I don't see any challenges in buying in California. I'm an immigrant. Okay. Like I came here, I've owned over 30 properties, so many doors. And my first property I bought at 23. How can that be a challenge? If I could do it, how can that be a challenge to anybody? So there was three things that I came up with because I'm like, okay, this is important for folks to know. It's a question that I get often is, Juan, do I buy in-state? Do I buy out-of-state?
Mm-hmm.
It's so expensive here. The barrier to entry. All right, so the first one is the barrier to entry. What's that even mean? Like, Kyle, if you wanted to go get a loan right now for a fourplex, a duplex, or anything like that, can you go get one?
Yeah.
Probably. Okay, so is there a barrier to entry for you buying something? No. Like, I see people, blue collar, young, old, anyone who really wants to buy and qualifies for a loan, you could go buy something. I get people fresh out of college, hungry. They've read the books, they've listened to a podcast like yours, and they're like, hey, I want to get started. FHA loan, I'm like, let's go do it. Live in one of the units and rent out the others. Live there for 2 years and then move on to the next property, refinance, et cetera. We just helped, during COVID, we helped a vet buy a fourplex property, 1.355. I know it sounds expensive, but through a VA loan, a lot of veterans are given this great opportunity to buy not just a single family home, but they could buy investment property. I mean, that's a tremendous opportunity to vets. Zero down, really, really low interest rates. So the barrier to entry to me is just someone making that up because no one's stopping any of us from buying anything that we don't want to buy. So that's the first one. The second one is cap rates are too low. Okay. The word cap rate, when we look at what a cap rate is, that's a snapshot of 1 year ownership. Are you going to own your investment for 1 year? No. You're going to own it for 10, 15, 20 years, right? So why would you make a decision off of 1 year, a 1 year snapshot? It makes no sense. Are you not going to raise the income? Are you not going to make improvements? Are you not going to manage it better? Raise the operating expenses? I mean, not the expenses, but raise the NOI? Of course you are. So we can't look at the cap rates. If you as an investor, anyone who's listening, if you are looking or making a decision based on what's the cap rate, and that's the only measure, you're doing it all wrong. There's like 4, 5, 6 other measures you should be looking at. So that's the other. Okay, so the first one is barrier to entry, not true. Cap rates are too low. So what? It's 1 year. Can you change it? Year 2, if you know what you're doing, and if you team up with the right team, you could change that cap rate. So why does the first year matter so much? So that's the second one. The third is it's too expensive. What does that even mean? It's too expensive. Like, do you think 20 years ago when an investor, some of my clients, these blue collar people that I represent, was it not too expensive for them back then? It was probably too expensive back then, right? But they got started and they knew that this was a long-term hold. So in California, I look at things as a long-term hold. One thing that I was taught by my mentor early on, he said, it's not get rich quick, it's get rich guaranteed, so long as you give it enough time. And that to this day is still absolutely true. Yep. So those are the three. Okay, barrier to entry, not true. Cap rates are too low, so what? It's expensive. And I'll say, what's that even mean? If the income supports the debt, you're perfectly fine in my opinion.
So what about the one thing I don't like about California is the landlord friendliness of the state, which it's not a landlord friendly state. So I would say that's definitely a negative. How can people reduce their risk when it comes to investing in a landlord friendly state? Because it's not a complete disqualifier. You just have to understand how to tackle that challenge.
Okay. All right. So last year, the state of California, the entire state got hit with rent control, right? And so then we were like, okay, what's this mean? Like, are people going to like want to get out? Like, what's this mean? And so a couple things. One, even with rent control in place, but my question is, have values dropped? So even if you would say California is is anti-landlord. Okay, even if that's a true statement, and I get it that they keep adding more and more and more restrictions, making it harder for us to manage the buildings that we've worked hard to own. I don't agree with that at all. But did it decrease my value? No. Did it decrease my rents? No. Are sellers getting out of California because, oh my gosh, it's the worst? No. So even with these things in place, and don't mention during COVID, they hit us with the eviction moratorium in the city of Long Beach. That means you literally cannot get a tenant out, a bad tenant out. I'm not talking about good tenants. I'm just saying, like, some tenants, they're bad tenants, and they're causing problems to your building, et cetera. You can't kick them out. So even with those things in place, I'm not seeing like this mass exodus of like, oh my gosh, throw up your hands, sell my property at a discount, get me out of this. I can't believe I made these millions and now they're going to limit how much more I could make. That's not happening. So how do you prepare yourself? Like, so if I'm an investor coming in, you have to just be like knowledgeable of what's going on and navigate the waters. Here at our firm, we've specialized in really knowing the rent control law. At one point, we had two laws. We had the state level law and the city level law competing against each other, different rules. It made it really difficult for us who buy and also sell apartment buildings. But all these things are is just rules, and we just got to play within the rules. And I don't believe at any point that because of these restrictions, I don't want to buy. That's never been like in my thought. I'm like, okay, I just have to do things differently, right? And I think if you're a buyer, learn from you guys, learn from me, reach out to me like, hey, Juan, what's this different? Like, can I raise the rent? It depends. If you have a duplex, all right, and you're going to live in one of them, guess what? You're exempt. You're exempt. You don't have to go by any of these rules. It doesn't matter, okay? And then there's other rules, like if you're going to do like major remodels, you could still give notice to move out. There's all these things that we're not exactly handcuffed, right? It is getting tougher for us, but it's not, in my opinion, it's not the end of the world. It doesn't mean that our values aren't going to rise. It doesn't mean that our rents are going to go down and not continue rising, which they've always done. So.
Yep. Just sounds like it's all about education and understanding the game you're playing. As long as you understand the rules and how to utilize them to your advantage, then you can get around them.
Correct.
So, okay. So let's kind of flip the switch here. What are some other things that you love about SoCal real estate investing right now?
Well, okay. So here's what I kind of see happening. Okay. So these are like some like opportunities. Hey, Juan, like, okay. It could be that on the larger scale, with the larger units above 5, they seem to be sitting on the market a little longer right now, okay? And the reason being is because a lot of buyers who were buying, all of a sudden, underwriting switch, they got to come in with a bigger down payment. You know, all of a sudden it skews your investment figures, and you're like, geez, do I really want to invest that much? And so right now I kind of see like a little bit of a stall. And so what might happen with some of the sellers that I don't want to use the word, well, some of the sellers that are like, why is my building not selling? And what we might see is kind of a gradual drop down in price in 5 units and above. Okay. Anyone, well, this was a statement that I was saying 2 months ago. Anyone who bought in the last 3 years, they were first-time investors. If their rents stopped coming in, which we thought they were, but it turns out that actually the rents continue to come in. Because with all the unemployment, we thought with some of these newer investors, they're gonna panic. They've never had a building where the rents don't come in, and all of a sudden they freak out. They're like, okay, I'm done, and just they don't have like they're not looking, years down the road. They're thinking right now. We thought that there was going to be a lot of these folks coming out and saying, okay, get me out of the investment game, but that hasn't happened yet. But it could be that towards the end of the year, we see more properties coming on market because we know that a lot of investors held their properties back. So I think towards the end of the year, I expect some good deals to be happening. And I mean, I've already talked about the benefits of owning in California. What I love is if you decide, because I don't know these other markets, I've never looked at a state, okay, but all I know is in Long Beach or in Southern California, if I choose to go the apartment route, the investment route, okay, I'm buying something that I know that there's demand for. Like people are waiting to move in. People are waiting to pay a little more. People are looking forward to you renovating this building bringing it back to life, making some improvements, and they're like waiting in line. So that's a pretty neat thing that you're doing. It's like, because I don't know what other business you could buy where people, like people are waiting in line. Like, so tenants are waiting to move in. And I don't know that every state has that, right? And then as much as we hear that, hey, California is losing part of its population, the LA Times came out with this great article where they're like, you are losing some of the population, but really what's coming in is these skilled professionals, big degrees coming in, wanting to live in California, Southern California specifically, because of the location. And so you can imagine if we have skilled labor coming into Southern California, they want to live here, they want to buy here, what's that do to our values? It continues rising it. So if you're an owner, you're in a great position. And if you're an owner of an apartment building, listen, during quarantine, right, they told everyone, whether you're a homeowner or anyone, stay at home, right? So I think housing, being a housing provider, providing good housing is more important now than ever before.
Yeah. Can you still get cash flow in California markets, or are they mainly an appreciation play?
That's a really good question. And so I thought about that. There's counties, there's parts of Long Beach that they might not be the most desirable parts of Long Beach. We could go out, Riverside County. There's Victorville. There's areas where you could certainly go cash flow if you didn't want to stay. Not all of Southern California is near the beach, right? So there's still affordable areas that we have. And when it comes to cash flow, it all depends. We help clients come out of a property. They're putting 50% down. Certainly, if you're buying in with 5, 10, 15% down, my advice is let's get you to a break-even point from day one. Then we're good. Okay, then let's move forward from there. And let's what changes can we make to the property? Where can we add parking? Where can we add laundry? The things that we know a tenant is going to appreciate, they're going to pay more for. I'll never say just raise the rent for the fact of raising the rent. What are we doing to justify that? What lifestyle benefit or amenity are we giving the tenant to be able to justify that rent? So when it comes to like, hey, can we cash flow? Of course, it depends on the location. And it also depends on your down payment. But appreciation to me is king. In fact, I thought about this. A lot of my clients, we've been really, really diving into who are our sellers, who are our buyers. So let me tell you who the sellers are for us. Between 60 to 80 years old, okay? They've owned for over 30 years, lots and lots of units. They've self-managed their units. A lot of them, and I joke around, they all have accents. That means that they weren't born here. They weren't given an apartment building at birth. They started from the bottom. They bought a fourplex. They bought a duplex. They bought a condo. I don't care what you buy. Whatever you buy, it's going to go up, right? And now what I see is they've made their appreciation, right? So let's do it this way. Make your appreciation. And now that you're at the stage of like, okay, now I'm older. Like now I don't want to go manage my units. Now let's go look at a state for the cash flow. And I think both could be achieved, right? But I think it takes time. And I think you need to have one to be able to have the other is what I recommend.
Okay. Where do you see California real estate in the next 3 to 5 years? We're obviously heading into a recession or already in a recession. So do you think it's going to bounce back quickly? Where do you see it in 3 to 5 years?
That's a good question. And so what our studies show, if we look back 30 years, in a recession, I know this is going to sound shocking, real estate actually goes up. So even though we're in a recession, that doesn't mean you're in a real estate bubble. Mm-hmm. It doesn't mean that real estate values are going to drop. So that's an important thing to know because people think recession, everything's dropping. Not the case. Actually, it's in reverse. Real estate performs differently. Our last downturn, 2008, that was the case, but that was kind of like we caused the recession. Okay, in this case, this was not caused by real estate. Real estate had strong fundamentals to begin with anyways. Mm-hmm. And so, so your question, where's it headed? Okay, so we all know if you raise the income on a property, you're raising the value significantly, and not dollar for dollar. If you get $1,000 more in a out of a building, you're not raising it $1,000 in value. No, we're going to multiply that by whatever multiplier you might be. We're looking at 15, 18, 20% off that $1,000. This is a significant increase in value. So let's talk about what's happening. Because of rent control, we're now restricted on what we could, on what the what the increase could be per year that we could do on the tenancy. Okay, so watch this. A lot of the landlords, a lot of our clients, even us, we would go years, 5 years, 10 years without raising the rent. And I know what you're going to say. Geez, that's complete reverse of what I've read. These books say every year you're going to raise the rent. I know it says that. But when you're self-managing your units, you're not raising the rent every year because you build a relationship with these folks and you want to help them out because someone helped you out. And so then you just keep them in place. Okay. So the rents weren't being raised. And now, here was the response from one of my mentors. He said, now, because of rent control, I have no choice but to raise the rent. So somewhere around 8% every single year. Now I have no choice. Okay, so if every investor now says, if I don't raise my rent this year, I'm going to be behind. No one wants to be behind anymore. Okay, now rent control didn't really help the tenants. It actually hurt the tenants because every owner out there is going to be raising the rent by 8% every single year. So Kyle, Lolita, if I raise the rent every year by 8%, what happens to my value?
Yeah, it goes up, and 8% is a lot. You know, I don't know any other market or any market where you're underwriting for 8% rent growth year over year.
And here's one other thing. In the past, if you kind of felt bad raising the rent, right? Like, I know, listen, we read these books and they give you these rules and you're like, okay, like that's really black and white. There's no like human aspect behind it, but guess what? Like there is in real life. When you're in the middle of this, there is, right? And so before, like we would feel bad, you'd raise someone's rent. Like, oh man, I feel bad. Now it's almost like, hey, due to rent control, we have to raise your rent. And almost the tenant is like accepting of it, saying, yeah, I guess you're right. Yeah, thanks, rent control, right? Wow. So anyhow, where do I see it? I don't believe that the recession is going to hurt us. Rents are going to continue to rise, and subsequently, if rents go up, values go up.
Perfect. All right, Lolita is going to take us into our final 4 questions. Are you ready?
Let's do it.
All right, Juan. What is
Ask me the easy ones. Ask me the easy questions, please.
All right, there's going to be 4 easy ones, okay? What is the one tool you use in real estate investing that you cannot do without?
So a big question that I get, it's like, Juan, when do you decide to buy something, right? And we're actively looking to buy something. Our goal is to acquire a new property every year, if not more than one. Okay, but there's opportunities in everything. I mean, we've purchased condos, commercial, multifamily. I mean, right now we just lost out on a small little land deal in Long Beach, which was unique. And typically you don't get land deals in Long Beach, and so. But the one thing that I've created, so, I've been a CCIM for 10 years. I also have a degree in accounting, like I told you. So, but with CCIM, I've learned how to like dissect a deal. Okay. But then from that, we've created something. CCIM is really, really good. In fact, I recommend anyone to look into that because that's what gave me the confidence to not only advise my clients, but advise myself on what should I buy. That analysis is really in depth. And I realized that in the smaller scale of stuff, you don't need that. It confuses most of my clients who didn't need that. And so we created the SAGE 521 formula, what that is, it's 5 evaluation metrics, 2 investment strategies, and an exit plan. And I think, so I take any of my properties or any of my clients' properties, we take it through this 521 formula, and we get a real clear picture on, should we buy it? Under what metrics does it kick butt on? Where does it kind of fail? What can we change after year 1, right? And so my 521 formula is something that I won't buy any property unless I run it through that. That's my formula. I didn't pay for an app. This is what I've created because I know that this has worked for me and my clients in the past.
Fantastic. Can you tell us a story about your biggest mistake in real estate investing and what's the main takeaway for our listeners?
Cool. Okay. So, I told you that I got started investing as a 23-year-old in college. And by the summer, after graduating, I had flipped my first condo, bought a triplex, and then started buying more properties. And so, and this was in 2003. All right. So then I had 5 years of like this massive equity growth, like, oh my gosh, it's so easy. I'm so smart. That was not the case because there was a lot of mistakes that I made. So my 2 biggest mistakes, one is getting into short-term financing. 12 months, 18 months, 24 months. Like I no longer sign up for short-term financing. It scares me because here's what happened. Short-term financing means that that's going to come due. And if the market dips quick, you're now stuck. and you can't cover that debt. You're negative. We were in a negative positions on several properties. The loans come due. Then you have to sell. Now you're a desperate seller. Okay, so short-term financing scares me. And that's why I'm a very, very big advocate on 4-unit buildings. Because when you buy a 4-unit building, you get 30-year financing. Okay, and so if you have 30-year financing, I now know my biggest expense is going to be capped for 30 years. That's a beautiful thing. So my biggest expense is capped. The one thing not capped is my rent, which is going to keep going up. It is literally, you can't, if your analysis stops there, you're going to win. You're going to win. Okay. So short-term financing scared, that was a big lesson. Lost buildings. Okay. Had to give them back. And then the other thing is choosing your right partners. Okay. I bought stuff with people, found really good deals. Because I'm a real estate broker, I'm in the front lines of seeing the best deals, right? So I'm in a great position. I get to see them first. And then I get to decide whether I want to buy them or do I want to take them to my database, okay? A lot of times, and you guys, in one of your videos that I saw, you said, hey, this is, I think you called it like, hey, this is not an individual event. You need a team behind you. So a lot of buildings that we own, we call our database. Hey, do you want to buy this with us? Who's going to qualify for the loan? How much money do we need? So not having every partner in agreement to how long to hold the property is a problem, because properties go up. Young investors, I don't want to call it young investors, just new investors see some level of money, see some growth, and they want to sell. And sometimes they sell too quickly, prematurely. You didn't maximize the investment. And so, so let me recap. So my first one was short-term financing. I don't like it. My second one is making sure that you have that strategy in place, the holding strategy in place in writing before you partner up with anybody, because I will promise you, you're going to have partner issues. And if someone wants to get out early, it creates a problem for everyone.
Thanks. What is it that you need to do now to grow your life to the next level?
Me? Or my advice for people?
No, what is it that you need to do now to grow your life to the next level?
I came up with something. I came up with the fact that there's two things that in my world that I need to be doing to grow, right? And the first thing is learn, right? So I have to learn every single day, learn from you guys, learn from people that are investing out of state, learn from folks that are buying like industrial buildings, people that are doing new things, right? So I got to be learning every day. So that's my first thing. And then the other one is I got to be getting leads. And in my case, I got two types of leads. I got leads on new clients, and I have leads on new buyers, leads on new sellers, leads on potential folks that might be selling me their building, right? So I came up with like, okay, I need to be learning and I need to be focusing on leads. And those two things will allow us to, continue our growth.
Finally, Juan, the easiest question of them all. Where can people find out more about you?
Sure. I would invite folks to visit our website. Anyone listening who may have a question, anyone listening who is in agreement or not in agreement, I want to hear from you, whether it's an email or a call, like, hey, Juan, you said something that, I don't think you're right. And that's true. I'm not saying I'm always right, but go onto our website. That's sageregroup.com. And sign up for our VIP, where we let folks know about our upcoming listings. Oftentimes, we'll highlight buildings that are not on the market, which is kind of a great benefit to members who are part of our VIP. Another thing is we will highlight other people's listings. I will look through the market and say, that is the best deal on the market right now. And I'll bring that to the folks that are part of our VIP group.
Great. Well, thanks for sharing your knowledge and experience with us all today. We really appreciate you being on the show.
Kyle, Lolita, thank you guys so much. You guys are doing a great job. Impressed. Like I told you earlier, you're doing everything right.
Awesome. Thanks, Juan.
Thanks, Juan.
Okay, guys, take care.